Let's be honest. Almost everyone working a 1099 gig or running a side hustle claims a home office. It feels like free money. But did you know the IRS loses more court cases over this one deduction than almost any other? It's because of something called the exclusive use rule. And if you have a guest bed or even a Peloton in your office, you might be walking into a trap.
It's true. The IRS is incredibly strict here. They don't care if you work in that room 40 hours a week. If your kids use that same room to play video games on the weekend, your deduction is legally zero. We call it the roommate rule, because if that space has any roommate, meaning any personal use, it's disqualified.
Does your home office have a bed, a TV, or toy box in it? Type clear in the comments if it is 100% office or mixed if it is a shared space. I will tell you which one actually survives an audit.
This fear of audit bait is real. I saw a post on Reddit where a user said claiming 20% of your house for a side gig is a red flag that most people can't back up. And they're partially right. If you're a W-2 employee, for example, you can't claim this deduction at all right now, even if you're 100% remote.
So, how do we actually claim it without the IRS knocking on the door?
You have two paths. First, there's the simplified method. The IRS allows you to claim $5 per square foot up to 300 square feet. That is a maximum of $1,500. No receipts, no utility bills, just simple math. It's outlined in IRS topic number 509.
$1,500 for just checking a box? That sounds like the safe way to go. But what if my expenses are way higher?
Then you use the actual expenses method. You calculate the percentage of your home used for business. If your office is 10% of your home, you can deduct 10% of your rent, your electricity, your heat, and even your trash pickup.
Poll time. Would you rather take a guaranteed $1,500 with no receipts, which is option A, or would you try for $4,000 but have to keep every single electric bill for 7 years, which is option B? Comment A or B below.
If you choose option B, you need Form 8829. You'll list your total home costs, say $30,000 for the year, and take your 10%, which gives you a $3,000 deduction. It's a bigger win, but you'd better have the paper trail to prove it.
Now, for everyone running an S-Corp, there is a secret way to do this that is even better. It's called an accountable plan.
This is the pro move. Since an S-Corp owner is technically an employee, the company can't take a home office deduction on Schedule C. Instead, the business reimburses you for the use of your home. You submit an expense report to your own company, the company pays you tax-free, and the business gets to write off that entire payment.
Wait, so the money goes from my business account to my personal account, and I don't pay income tax on it?
Exactly, but you still have to meet that exclusive use test. No beds, no gyms. If you want to be audit-proof, take a photo of your office today. If the IRS ever asks, you have visual proof that there isn't a guest bed in the corner.
So step 1, measure your space. Step 2, check for personal items. Step 3, choose simplified or actual. If you're an S-Corp, make sure you have that accountable plan in your corporate minutes.
Just remember, I am an educator, not your CPA or tax advisor. This is general information based on IRS publications, not personalized advice. Tax situations vary. Always consult a qualified tax professional about your specific circumstances before making decisions.